Good morning, good morning, good morning. Welcome to today's morning blast with myself, Mr. Michael Brown. All day today, it is Thursday, the 1st of May, just in case you were wondering. Before we crack on with the best, the ultimate morning preview to jumpstart your trading day, let me get the legals out of the way. So, as usual, nothing discussed on this spaces session constitutes trading or investment advice or infers any kind of endorsement by PIQ, myself, Ryan Paisley, or of course Mr. Michael Brown, which I may, if he's in town, see him for a beer later because he's very lucky like that.
Oh, well, very good morning, Ryan. Good morning, everyone. I was just thinking my day was going okay, but it looks like it might take a turn for the worse now.
Sorry, are you recording this in a toilet?
No, I'm in a very big meeting room and it's only got me in it. So that's why
So,
there's a
so,
bit of an echo this morning.
that's a shame because I had a lovely image of you taking a shit.
No, well, oh, God. No, and actually, I'm going to have a bit of a rant this morning because it
What about
seems.
about toilets?
No, not about toilets, thankfully. But
Uh,
it seems now, for whatever reason, when the temperature gets over 20 degrees, that's an excuse for every man and his dog to work from home. I mean, what's that all about, for God's sake? It's not that warm.
yeah, so I can't wait to see you down the pub and listen to you moaning all afternoon.
Deary
Two in a
me.
row, actually, because it's tomorrow's non-farm pint. Oh, aren't you the lucky one?
Yes, right. Shall we move on?
Yeah, go on.
Let's crack on because I do actually have quite a lot to get through this morning from this very echoey room. And of course, May gets underway today, a third of 2025 out of the way. Although I think the first 4 months of the year have felt like 4 decades for most of us. In terms of yesterday, it was a very, very choppy and whippy day in the equity complex. The S&P and Nasdaq were down 2 and 3% intraday, respectively, but actually ended the day, if you look at futures at least, up by around about 1% apiece. The downside coming after the US GDP figures, the upside and the recovery extending in the after hours session by virtue of solid earnings from both Microsoft and Meta after the close yesterday. In terms of those fundamental drivers, then, we may as well start with the GDP figures out of the States from yesterday. The economy contracting by 0.3% on an annualized quarter on quarter basis in the first 3 months of the year, broadly in line with expectations, which was for a fall of 0.2%, but clearly a marked slowdown from the 2.4% growth that we saw in the fourth quarter of last year. Of course, the vast majority of this drag on economic activity coming by virtue of the surge in imports that we saw as US businesses front ran the expected imposition of tariffs. In fact, imports on their own subtracted 5 percentage points from GDP in the first quarter, and actually the net exports contribution to GDP was a record negative, going back to whenever the whenever the Census Bureau started collecting the data. Coupled with that, we also had a relatively hot core PCE print, which came in at 3.5% for the first quarter, above the 3.1% consensus and well above the prior 2.6%. So all a little bit stagflationary, to be completely honest with you, although arguably you could say that the GDP number could have been worse, but then it probably will get worse in the second quarter because all we've seen so far is the front running of tariffs coming into the data. We haven't actually seen the actual impact of those tariffs, which were obviously imposed at the start of May, and how uncertainty associated with that has essentially frozen the vast majority of business activity and investment in the United States. Nevertheless, we did have, as you would expect, some reaction from the Trump administration to the GDP data. President Trump himself saying that the GDP has nothing whatsoever to do with tariffs, and that when they get rid of the overhang from President Biden, the boom that starts will be like no other. God help us. We also heard, if you think that's bad, we also heard from White House trade advisor Peter Navarro, who said on CNBC, and I quote here, "This is the best negative GDP print
Love it.
I've ever
Love it.
seen."
Yeah,
I
I love
mean,
that. Do you know
what
what
the
that reminds me of?
fuck?
Do you know what that reminds me of? In the morning after, when you're WhatsApping your mates and you went and you say, "Do you know what? She was the best looking fat bird."
Are you speaking from experience there, Ryan?
Oh, massively, massively. Go ugly early, avoid the rush. That's what I always
And she
say.
charged me less than all the others. Well, let's move
Wow, 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 wow. That's too far. That is too far, my friend. How very dare you? How dare you? Moving on.
Oh dear. But anyway, Peter Navarro, absolute moron. He was also making some other comments on trade, which of course is still a major focus among market participants. Navarro saying it also in this CNBC interview that the best way to negotiate with China is to do so very quietly, which I assume is why he went on a business TV channel that has 350 million monthly viewers to talk about it. We also heard from the President Trump. He was talking about the market, saying that this is Joe Biden's stock market, not Trump's. He said that when the S&P was down 2%. So I assume, given we closed 1% higher, it's now his market again. Sticking with the trade situation, Bloomberg sources reporting that the European Union are to present some trade proposals to the United States next week. I did a bit of digging around this, and it doesn't actually seem like anyone knows what those proposals are or when next week they will be presented, but nonetheless, something certainly worth keeping an eye on. And we also heard from China yesterday, this report coming from, God help me, Yuan Tan Tian, who are apparently
it's that one. Yeah.
who I'm sure everyone is familiar with Yuan Tan Tian, or Tian, whatever they're called. They were saying that the US have recently reached out to China to discuss tariffs. Apparently, this is a sort of relatively new state media outlet in China, so take that with a little bit of a pinch of salt as a result of that. In terms of other bits and bobs from yesterday, because it was a very, very busy day in terms of catalysts, we did have a few other economic releases. GDP in the Eurozone growing by 0.4% on the quarter-on-quarter basis in Q1, double the prior and double the consensus 0.2%. I would imagine that a lot of this is the opposite of what you're seeing in the United States. If people are front-running imports into the States, they are exports from other places like Europe, like China, like Japan, and therefore boost the GDP figures in those countries as a result. We also had the April ADP employment figure out of the States. Per ADP, employment rose by 62,000 last month in the United States. That's the slowest pace since July of 2024 and well below the bottom end of the forecast range, although, of course, it's ADP, so take it with a huge pinch of salt ahead of the non-farm payrolls data that we get tomorrow. Moving on, the US Treasury, they set their quarterly refunding at $125 billion, which was bang in line with estimates, and they reiterated their previous guidance that they see auction sizes remaining steady for, and I quote here, at least the next several quarters. That meant that the QRA announcement itself was almost entirely ignored by market participants. Into the back end of the trading session yesterday, as I mentioned, we had some very solid earnings from Meta and Microsoft, both delivering top and bottom line beats. Meta also delivering guidance that was broadly in line with market expectations, if not marginally better. Both were trading up by well over 5% after hours. We also had earnings out from Qualcomm yesterday. They missed on top line on revenue. They beat on bottom line EPS. They issued guidance that was a little bit mixed, and they softened in the aftermarket session yesterday. A couple of other stories just to mention very briefly. There was a bit of a commotion with Tesla overnight. The Wall Street Journal reporting that Tesla had been hiring, or the board of Tesla had been hiring external recruitment firms to look for someone who could replace Elon Musk as CEO. The chair of the board has been out this morning to basically say that is false reporting, and we've got no idea where that came from, and we've got no intention of getting rid of Musk. And last but by no means least from me, for the moment, we have had a policy decision out of Japan this morning, a relatively dovish decision actually from the BOJ at first glance, with rates holding steady at 0.5%, but the policy statement pushing back the expected timing as to when the BOJ will meet their price goal. Governor Ueda...
Everyone loves a good pushback story.
Oh, no, we're back to your fat bird again.
Wow!
Sorry.
Yeah. Yeah, no, to be fair, I'm banged to rights.
Moving on. Governor Ueda at the post-meeting press conference really sticking to his usual script, noting that the BOJ will continue to raise rates if their economic outlook is realised, but he was caveating that by saying that the likelihood of that outlook being realised is now not as high as it was before, and that it's hard to say when they will obtain greater certainty that that outlook will be achieved. Then Ueda, who's clearly been taking less lessons in communication from ECB President Lagarde, turned around and went, actually, just because we've delayed when we think we're going to achieve our price goal, it doesn't mean that we're going to delay when we deliver rate hikes. So a bit of a communications shambles from the BOJ this morning. Nonetheless, the market has taken pretty much all of that on balance as a relatively dovish message. We've seen dollar yen push up north of 144.5 in early trade this morning, and actually the dollar broadly firmer against most G10 peers, with the dollar index briefly back above the 100 mark, cable back under 133, and the euro briefly dipping below 113 as well. For the time being, that is all from me.
Thank you very much, Mr. Michael Brown. Just quickly, it is May Day today, and as usual, the European members, many of the European members, will be taking this as a day off because they love a fucking day off work
Well,
from London.
as I said internally this morning, once again, it's us plucky Brits propping up the rest of the continent.
Yeah, well, look, you only have to look at the big power outages earlier on in the week. It was Gibraltar, the strong rock of Gibraltar, holding strong, keeping the power on for those people that are lucky enough to live in the enclave that is the sunny side of Britain. Anyway, right, I feel like I'm in need of a cigar now. Anyway, some overnight news headlines from our dear friend, Mr. Zach Judith Chalmers, aka. So obviously, if you're not already subscribed to the Overnight News Roundup, is our Substack. It is the best way to catch up with all the overnight news headlines you might have missed while you were sleeping. But some of the choice ones from today's, I will read out. My ChatGPT's had a bit of a shocker trying to refine them, so apologies if they go a bit tits up. But we'll give it a go. It's the first of the month, sun shining. Yeah, no one's going to be angry. Um, China is holding off on formal US trade talks while assessing Trump's teams and a 90-day tariff pause, though state media signals a softer tone on conditions for negotiations. Trump says he sees, quote, potential, unquote, deals with India, Japan, South Korea, but is in no rush. That's a quote, citing tariffs between, citing tariffs benefits already flowing to the US. The USTR Greer says that deals with some countries could close, in weeks. This is, we heard last week that there's going to be days, so there you go. But India talks are not close, and no formal China talks are underway. One thing to note on this: if India isn't close, South Korea we know isn't close because they've said they're going to have to wait till June, July until they've got a functioning government.
Yeah.
Potentially, Japan as well has said, look, we're in no rush. We want to hold back because basically Trump administration said some words that kind of lit a little bit of a fire in the APAC arena with China and whatnot. So potentially the UK could emerge as one of the first ones to get a trade deal, in my opinion, because I think at the moment Keir Starmer's just going to bend over and take whatever Trump's giving him, especially as we got the local elections today, and I think Labour could be having a bit of a drumming. Fingers crossed. Not political, but yeah, fingers crossed. Bunch of cunts. The EU will present a the EU will present a trade proposal to the US next week, including a non-tariff barrier cuts, LNG purchases, which is something that I've been harking on about for a long time, and a framework to curb China's still overcapacity. Senate Republicans blocked a resolution to repeal Trump's Liberation Day tariffs, cementing the GOP's backing despite growing economic concerns. Nvidia's Jensen Huang, or Hong Huang, however we pronounce it today, will brief lawmakers today on export compliance in a closed-door House roundtable on chip controls. Airbus called for a return to tariff-free aerospace trade. I think this was something that was quite popular early 90s, perhaps, warning the current war means, quote, only losers on both sides. Australia reported a record quarter of gold exports to the US. Obviously, as we've said many times on things like this, that's tariff front running. Flipping a rare trade surplus into deficit thanks to Trump era buying pressures. The EU is warning it may time limit red tape relief for UK food exports unless fishing access is granted beyond 2026. How about you fish your own fucking waters? Sorry. Macro. Trump publicly pressured Power again, claiming, I quote, I understand interest rates better than him, unquote, and calling for immediate cuts. The BOJ, as Michael said just now, held rates, but downgraded growth and inflation forecasts, citing rising tariff risks. The yen sold off sharply post Ueda depressor. Japan's April factory PMI shrank for the 10th month in a row, highlighting global demand weakness tied to tariffs and supply shifts. China resell home prices, sorry, put my teeth in, fell 0.7% month on month in April as excess listings compete for limited demand and amid subdued sentiment. Chinese bond markets are seeing inflows from multinationals seeking cheaper financing and hedging against US tensions. Macau gaming revenue rose 1.7% in April, beating expectations ahead of the Golden Week travel. Remember, obviously, Golden Week, pretty much China business comes to a standstill in terms of markets coming to a standstill. Australia's Labour government is tipped to win Saturday's election. Opposition promises to scrap tax cuts and shrink bureaucracy. South Korea's exports grew year on year in April for a third straight month, despite tariff headwinds led by chips and autos. IMF cut the MENA oil exporter growth forecast, citing falling energy prices and Trump's global tariff drag. Norway's 1.8 trillion, that's with a T, oil fund says AI-led trading will cut its execution costs by 20%, signaling deeper changes in global markets. Geopolitics, the US signed a Trump-backed mineral and reconstruction investment deal with Ukraine last night, securing priority access to key resources. Senator Lindsey Graham is drafting a Russia sanctions bill because, sanctions have worked so far, with tariffs on countries buying Russian oil, gas, and uranium. China's foreign minister Wang Yi praised Iran's diplomacy ahead of renewed US-Iran talks, which are due to take place this Saturday. The US Army will overhaul its divisions, adding 1,000 drones per unit and retiring legacy equipment. The UK is in advanced talks with France and Saudi Arabia about recognizing a Palestinian state at the UN meeting in June. Obviously, that will be very big news if that goes ahead. Finally, just some corporate headlines. Meta beat on the ad revenue, matched Q2 guidance, raised capex to fast track data centers. Microsoft Azure, they beat expectations again with strong non AI growth. Overall, capex growth is moderating. Tesla, as Michael said, denied Wall Street Journal reports that they're seeking a successor. Although I think they might play this badly because I do believe successor planning is probably taking place. So to outright deny it means that if Musk goes a bit sideways, which he's got a tendency to do, investors could look at this and go, well, hang on, you're not even planning for him to be replaced. And he's just spent the last 4 months over with Trump. So I think they
Agreed.
could have handled this a bit better. Amazon to invest for, sorry, can you say that again?
No.
No. Amazon to invest $4 billion in expanding rural delivery networks across the US. Apple hit with criminal contempt referral over App Store restrictions could face federal prosecution. Robinhood, obviously the broker that we don't talk about, not as good as Pepperstone, posted strong Q1. Nvidia's CEO says every US company will become an AI factory. There you go. Google is testing chatbot native ads as Alphabet adapts to monetizing for AI. Rolls-Royce said it will offset tariffs and reaffirmed its 2025 earnings guidance. Lloyd's met earnings despite raising provisions for economic risk. And finally, from me, South Korea's chip exports rose 17% year on year in April, hitting a record for the month as AI and DRAM prices rise. That's mainly for Tom Talks Cars. If he's listening, I bet he's not. No, he's not. Oh, fuck it. Right, back to you in the studio.
Well, thank you, Ryan. Turning to today, then, as Ryan rightly mentioned, the majority of Europe out for Labour Day. They will return tomorrow. That does mean we have quite a light docket ahead. In fact, the only notable release in the European session this morning is the final manufacturing PMI figures from the United Kingdom. They are expected unrevised at 44. Across the pond from the United States this afternoon, we do get the weekly jobless claims data, although neither the initial nor the continuing claims print pertains to the April non-farm payrolls survey week, with that data obviously due tomorrow lunchtime. And then at 3 o'clock this afternoon, we have the latest ISM manufacturing PMI data out of the States. The headline metric seen falling to 48 from a prior 49. Of course, focus also falling on the employment sub-index ahead of the jobs data on Friday. Other bits and bobs today, there are absolutely no central bank speakers on the Bloomberg calendar, so we can all rejoice at that. And then in terms of earnings, it's another hefty slate of corporate reporting. Before the market open, reports due from the likes of Eli Lilly, MasterCard, CVS Health, and McDonald's. And And then after the market close, we hear from the likes of Amazon, where consensus sees EPS at $1.36 on revenues of $155 billion. Options pricing a move of about 6% in the stock after hours. We also have a report from Apple. They are due at 9:30 this evening, London time. EPS seen at 162 on revenues of $94.5 billion, with options seeing the stock moving by plus or minus 4%. Of course, focus also falls on any trade or geopolitical or any other headlines that Trump may want to make through what is going to be a very, very sunny day here in the Square Mile.
Thank you very much, Mr. Michael Brown. I'll be giving you a little nudge later on and let you know where I am. But I fancy a few beers in the sun if you fancy it.
I'll get that number
Why
blocked
not?
right now.
You fibber. Right. Mr. Michael Brown, thank you as always. Shout out to Cam and Angie. Obviously, we're doing the crypto blast at 1 and the
Oh,
grey
shit.
market blast at 2. Do tune in. Oh, you're right. Me and myself will be back. Me and Michael Brown will be back tomorrow morning. I'll probably have a little bit of a hangover, but it's a synthetic Friday. The sun's out. If you are around tomorrow, speaking of which, obviously it's non-farm pints. Myself, and Michael Brown are going to be having some beers with quite a few people by the looks of it now. So come down. We're in the Oyster Shed on the River Thames. Lovely day for it. Listeners, I know I always say it, but we really do appreciate you. Thank you so much. Your feedback means a lot to us. And yeah, we'll see you all tomorrow.
See you
Goodbye.
later.